In this episode, making an investment decision and invest money is just the beginning of your work that you have to do. Growing the company and then exiting the company, right? It's not only about one round of investment. They have developed a great technology, but the technology itself is not going to create a successful company, right? So you need also a great business model. You're in business where you need to compete with others, so you need to be more efficient. If that would be the case that the one that has most money always win, then the corporations that has a lot of money would always develop the best things, but that's not how it works, right? They're actually investing into startups because they know themselves that they cannot be efficient in building new things. If you would not take enough risks, you will not create those big returns because you will end up maybe with businesses that are, maybe are even profitable, but they're not really successful businesses. So you need to take the risk. You need also to go for more ambitious projects and more risky projects.
Welcome to Pragmatic Talks, a podcast and video series where we discuss startups, contemporary digital product development, modern technologies, and product management. We believe that everyone should have equal access to knowledge about product development and entrepreneurship, and also everyone should have the opportunity to apply it in pursuit of making our world a better place. Through this series, we aim to create an impact on the future world. Today we invite you to our interview with Jarek Pilarczyk. Jarek started his journey as a tech entrepreneur. He has founded several companies and has transitioned into a seasoned angel investor. Currently, he is a partner at a venture capital firm where he leverages his rich experience to nurture and invest in the next generation of innovative startups. We'll be discussing the unique challenges and rewards of venture capital and gaining his invaluable insights on what it takes to thrive in the competitive world of startup investments. In this episode, you will learn what are investors looking for when searching for startups to invest in? How do investors evaluate startups before investing? What does a startup selection process look like from the investor's point of view? How could investors support startup founders after the investment? And how could you start investing in startups and become an investor on your own? And now, ladies and gentlemen, please welcome Jarek Pilarczyk.
Welcome in the next episode of Pragmatic Talks. Today our guest is Jarek Pilarczyk. We know each other from like a couple of years. You started as a startup founder and entrepreneur, and then you ended up right now as a VC partner, and you're building your own venture capital with a couple of your partners, colleagues. The first question, Jarek, is who is Jarek Pilarczyk and what is your story? So please tell us more about it.
Okay, so I was always answering this question that I'm an entrepreneur, and that used to be true for last 16 years of creating different companies. But as you mentioned, right now I'm kind of transitioning into the other world. But to tell the story, I was visiting US still when I was during my studies, and got inspired about technology and how the things are developing, especially that was still the times where the internet was in early stages. And came back to Poland and decided, okay, I have to do something, So basically, I've decided to start a company still during my studies. I was studying at technical university in the Silesia region, and try out to build something on my own. And of course, how it is in the beginning, especially when you have technical knowledge and not so much of a business knowledge. So it was not really successful in the beginning. But after a while, I kind of started to utilize the experience I gained building technology solutions, and I was really into agile methodologies, which at that time, that was like 2007, 2008. It was not really well known yet. Now everybody's talking about Scrum, Kanban, and everything, and it's like a standard thing to do, right? So that time, it was actually a bit of an advantage I was offering to partners, and I started to offer this as a service to companies from Scandinavia, which was my kind of a first international contracts and working with international companies. And based on that, I actually developed quite successful technology company, which I have sold in 2012. And after that, there was a bit of, started two paths. One thing was that I started another company in 2013, but I also, wanted to do more. I was inspired by startup world and everything. So I also started a bit of angel investing. We'll come to that, but angel investing, I learned a lot, and as they're saying, you're learning through failures, and I failed a lot in that as well. But I've then started to focus more on my second company, and I exited this company successfully in 2021 to a Finnish-based corporation. So then, from that point also starting to look, what is next. And based on, different discussions and so on, I decided that, I would like to try the VC world and see how it is from that perspective.
Great. So today I would like to focus on your perspective, based on your experience as a former entrepreneur, 2 exits, then angel investor, and now VC partner. I would like to focus on your perspective on investing into startups. But before we get there, I would like to learn more a little bit about your history. So let's start from the beginning. So beginning of your investor's history. Let's start from your first investment. So could you recall what was the first startup you invested?
I think that one of the first startups that I've invested was actually startups in the gaming industry. I'm not going to break the name because it will probably not tell anything to anybody. But this was kind of a reflection of my own desires, like a founder from technology company to be in the gaming industry. This was one of the first lessons I've learned in the investing, that don't invest into something you don't understand. And of course, I could say that I was a gamer in the past and I knew how it is, but it was a completely different world than the kind of a B2B software, enterprise software that I used to work with, right? So of course, that was not so much successful. But then I, of course, invested in a bit more companies. And the thing is, I was looking upon those companies not so much as an investor, but rather like an entrepreneur that would like to kind of develop them on my own, right? And I think that was one of the first mistake, because you can work or develop one company, but you cannot be investor in many and doing the same thing. As it's not the same. There needs to be a different leader. There needs to be a founder that actually is responsible for the company. And as an angel, you can, of course, bring some knowledge, but you will not do it yourself.
Okay, so if not based on the idea that, okay, I would run this company on my own, or I would like to be a part of this company. So what are the factors, or what are the criteria that you take into consideration, or you took into consideration when you used to be a business angel, when you were choosing the companies to invest into? What did you learn maybe in that way? Like you said that you learned from mistakes, or some of the mistakes at least, but at the end of the day, you've been pretty successful to the point that right now you're working on VC and you have some capital to invest into, like bigger capital, not only your money, but also convince other limited partners to invest into your VC, to actually invest into the startups that you are picking. What is your strategy in terms of choosing the startups to invest, and what would be your recommendations to others?
Yeah, so from the perspective of learning about investment, so I was investing as an angel investor, and at some point I also started to work with the VC to kind of get the other perspective. I was kind of more of an advisor, seeing into the technology sides of the project, but also being able to see a lot of different projects. So this, the first lesson, of course, showed me that it's not so much about the business itself, but it's also about the team, right? So the team is important. And I remember that one of the investments that I've been participating in, it was called EveryTap at the point of working with the VC, and it was about using beacons and in these services for the customer loyalty programs and so on. So basically, looking upon this investment, I was already looking more into team and thinking about technology as well, because of course that was my background, but I was not yet looking upon that much into the market that they were in, right? And of course, at that time, Bluetooth beacons, that was like a hype, right? So everybody would like to invest into something like that. And actually this investment has been exited. So it was kind of, from that perspective, was successful because there was an investment and it was exited. But looking upon what happened next is that they have not grown significantly, because the market that they were trying to address was not necessarily like growing just because of the hype. So I've learned that one of the second main factor about the investment is also the market and understanding of the problem. So I would say that now, whenever I'm looking upon possible investments, one of the two first factors I'm looking upon is the team, a founder, and then the market and understanding of the problem that there is in the market.
So what stages are you investing right now? What stages have you been investing in the past, like does it change it, or right now with VC you are looking for startups at the same stages as you invested in the past because you have like a lot of experience at this stage, or maybe you are moving to the later stages with VC?
Yeah, it's still about pre-seed, so very early stage. And myself, I really enjoy this beginning of a journey. I was there myself a couple of times, and I've been also kind of working with founders in that stages as well. So I really like the initial dynamics and so on. So I can say that the most of my experience is in that area, right? So as we mentioned before, don't invest in something you don't know. So I don't know that much about the later stages, other than kind of seeing how it is to get the another rounds and what the investors from those others rounds are looking upon, right? But I think that still I can bring most of my knowledge and experience I can bring into those early stages. So that's why I'm trying to focus on that.
What's the difference between business angel and venture capital? We spoke about it a little bit before we started recording, and I know that you have your own definition of who is the business angel and who is not a business angel or proper business angel. So please share it.
Yeah, I don't know if I want to distinct that much the business angels, maybe just to show kind of my perspective of what I think the business angel can do and what is the difference towards the VC, right? So my perspective is that the business angel is not the person that is actually giving only money, right? If I look upon being able to be successful but just pouring in money into the company, I would say that this is not the best way to succeed in that. I think that the angel investors are really good when they can bring also kind of a knowledge, the market perspective. So if somebody is looking for an angel investor, that would be, those additional factors that he should take into consideration. When it comes to VC, VC is a bit different from the perspective of the level of money that they're investing and the portfolio. And so basically they are having a bit broader perspective of what they're investing into, and also have a much bigger benchmark of projects they can invest into. So they're completely differently choosing the projects. I think that one of the things is when I'm also kind of comparing people investing their own money and the VC, I think that one of the biggest difference would be that the management, the GPs from VC are investing to win. Mm-hmm. And when you're investing your own money like an angel, you're more kind of investing not to lose, right? I would say. So I know it might be hard to understand in the beginning, but if you will kind of think about the perspective of evaluating a company, then you are totally different thinking about it, whether you should invest into this project or you should not invest.
So do you mean that the business angel investors are way more risk aware than or maybe the VCs are more risky in terms of making the decision of taking the risk?
Angels investors are not thinking that much about how far this business can be developed, right? So they're kind of more thinking from perspective, okay, does it make sense? Is it like something that can succeed? But they're not thinking how far it can succeed. So how big this can go, right? And when you're in VC, you have to get that perspective. You really need to think about, how this company is going to be developed. Do you see that it's possible for this company to scale, right? Is the market big enough? Is that really a problem? How this team is unique comparing to the other things that are going on, right? So you really have to take into consideration more long-term perspective.
So you already mentioned that as a VC, you are looking more into the strategic, more into the strategy of the company and the potential strategy of the growth, etc. So what are other differences in this approach, in this investment strategy?
Maybe, comparing to what I was doing as an angel investor, was that I was kind of looking upon the things that I was excited about, trying to follow the things that I enjoyed, more than trying to find out the things that make sense. And also when you're in a VC, you're also kind of taking this perspective that it's not about like, I will put in money right now and then try to help and then see what will happen. In the VC, you also need to kind of have this kind of a strategy of how you want this company to develop and how you're going to help to get from one investment to another round, what is important. So you really are more, you're engaging in a more long-term kind of a perspective in that way.
Okay, so maybe let's talk a little bit more about how VC works and how also angel investment work. Yeah, like I know that some of people who are watching it, listening it they are aware how VC works, how startup investment works. But I learned from many discussions with the startup founders that a lot of them have no freaking idea how venture capital works and who is the GP, who is LP, what's the differences, and actually some of the startups don't even know where the money come from, and in VC especially. Like in business angel investors, it's pretty easy. It's usually their own money. Yeah? But in VC, as you said, it's not necessarily investing your own money or not your own money only.
Right. So basically, if you look upon the VC, usually it looks like that you have general partners, right, which is the management side of the fund, and there's LPs, limited partners, which are the ones that are investing into the VC. So basically, you have a team that is responsible for managing the fund. And but also it is a good practice, and that's the standard practice, that GPs are also investing their own money, so they have a skin in the game, right? But basically, what you're trying to do is you're trying to build a larger investment vehicle, so you can first of all diversify, and the second of all having enough capital to build a model for your fund that can return the money to investors at the larger possible multiplier, right? So basically, you're looking upon what level of diversification do you need, what level of investments you will be doing within the fund, so that you can create the biggest returns to the investors. And this is what the GPs are responsible for. They're thinking about the returns to their investors, not only just finding a great project and great PR because they're doing AI or anything. You really need to think about returns, not only the investment itself.
So what's the role of LP, limited partners, and what is the relation between the GP and LP?
It depends. Actually, we can discuss a bit more maybe who can that be, right? So this can be somebody, a private person that has money, and basically the same as he's investing into the stock exchange or something else, he's investing into a VC fund, right? VC fund is also an asset class, basically. And other than the individual person, this can also be like a family office, right? Which is professionally managing the funds of one family or more families. This can also be so-called funds of funds. So basically, you also have a funds which are not directly investing, but they're investing into VC funds, right? So
sounds like a pyramid.
Yeah, but it's not actually a pyramid. It's just the way it is.
It's just the diversification and scaling up the resources that you have. Yeah.
They can also invest into different type of funds. They can invest into VC funds. They can invest into kind of a private equity. So this is basically a different model of how they're investing their money, right? And also it's also much larger scale, of course. So basically, I would say that in the end, if you look upon that, it's all about creating the diversification, but also whenever you're investing only your own money, there is a different. You have a different leverage than when you have a larger pool of money that you're able to invest.
Mm-hmm. Yeah, this is why, like VC can do more. Yeah, like so. What's the relations between LP and GP? So who is making the decision at the end of the day? So you found a great startup to invest into. It's your decision as a GP, or is there any conversation between LP and GP to make this decision about investment?
As a GP, you're responsible for the fund. You're responsible for the returning the investment to your LPs. So basically, you can work with some LPs, like basically, especially if they're coming from the market that you are willing to invest in, and you can try to get some more kind of insights and so on. But in the end, the decision is yours. You're responsible for it, right? So LPs. In that term is more kind of a passive investor. They will know about what you're trying to invest and so on, and they will have an exposition to that, but they're not the part of the committee to decide about the investment.
Mm-hmm. I think it's a good moment to do some a little bit of advertising. So tell us more about the VC that you are currently building, and what's the name, if you can provide it already, and what are you investing into, and who can join you as a maybe LP, or who can apply as a startup?
advertisement you're saying, right? Yeah, of course. So I'm currently starting a fund called Balnord, and this is a VC that is being created by 5 people, and 4 of them actually coming from the Blackbirds, which is a quite well-known fund in Poland for some successful investments, and lately also quite a good exit that a lot of people heard about, probably Telemedi. So I'm actually joining an experienced team, bringing another perspective into how they're assessing the deals and how they're supporting the portfolio companies. So I'm actually joining on the position of operating partner, which is a very specific thing because there is no other fund in Poland that has the same way of approaching the VC investment. What is different in this fund and the strategy that it is going for? So first of all, it's a so-called high conviction fund. So it means that normally if you look upon the VC world and what a lot of funds are trying to go for is they're trying to have a large portfolio of companies and they're trying to do like the investment into different of those companies. And especially they really like if there's another VC investor that kind of is proving that it's worth to invest and they're just adding additional money.
Like a leading investor, yeah?
Yeah, for example, in high conviction, we are always going to be the lead investor in pre-seed or seed. And not only that, but we are also going to follow on with the another rounds, basically. So our thesis and our thinking is that we want to give the best founders the leverage, first of all, of the size of the capital that he's capable of getting from us. And the other thing is also this security that if everything goes well, he will not have to spend more time, more effort to get another round because we are there to support him. And, from our perspective, also looking upon the experiences of the past investments and so on, we can see that this is also work the best when it comes to returns to the investors. And by actually getting also enough, stake in the company that it actually makes sense for us also to get involved. Mm-hmm. And when it comes to the, founders, what type of founders? So, of course, we have some verticals that we're interested in, and we're looking upon especially projects within the deep tech area, and also what we call the data-driven software. And maybe just to say what is the data-driven software, because that might not be so much, from the name itself, it's maybe not that clear. And one thing is either there is a software that is capable of getting a lot of proprietary data. So basically something which is not that much public available, because wherever something is public available, that's not that easy anymore to create this competitive advantage. And the other thing is when you have specific knowledge how to process the data, right? So it's in many cases is actually using AI algorithm to help you process the data. So that's the other thing. And we have like main 3 verticals that we're trying to focus on. And one of them is supply chain. The other one is fintech. And the third one is digital health. Why we've chosen that one? Because those are the ones where we have knowledge. We've been working in those verticals. And as mentioned before,
Do not invest into something that you have no idea about. Yeah.
Exactly.
Okay, perfect. So any regions of the world that you are interested into, or you're global investors, or maybe Poland only, or I don't know, Europe, Eastern Europe?
Yeah. We're focusing on Poland and Baltics, so Latvia, Lithuania, Estonia. That's the geography area that we're investing into. But we're also investing into founders coming from this region. It means that if somebody is starting a company in UK and is from Poland or from Baltics, this is also something that we're going to invest. And why we're looking upon that is because be the best in town. So it means that like you have to be best in the place where you are. It's hard really to be the best founder in the world because we cannot be that close to all of those founders. We want to be the first choice investor for the founders from this region, the ones that we can really kind of build close relation and really support them in building the company.
So what is the ticket size? Like you said that you're investing on the pre-seed and seed level, so I can expect that it's not like a couple of millions dollars, but maybe I'm wrong.
Yeah, so what we're looking upon is that we're looking upon an average ticket on the pre-seed of 600K euro. Mm-hmm. And when it comes to the seed round, it's around 1.2 million euros. So it's
quite big. It's like a quite huge ticket for pre-seed and seed.
Exactly. So it's quite substantial, and this is also what I've told before, that this is also what we want to bring in to the table. So the founder really have the capital to develop on the idea that he's pursuing, and so he does not have to think about it all the time, but really can focus on developing the business.
So is there any chance still to join your VC as a limited partner?
Yeah, when you're in the VC world, you're always looking for LPs. So there's always a chance to take a discussions, to see what we're doing and invest. So if you look upon how the VC world works, even if we are creating the fund 1 right now, we will create other funds in the future. So fund 2, fund 3. So we're really thinking about it long term. So we're more like creating a investment company, investment firm, not only doing it once, but we want to do it many times.
So maybe let's also, not everyone knows how does it work. So also let's talk about how does it work when someone would like to invest into the VC or invest into startups actually through the VC. So how does it work? And in your case, what's the minimal amount of money that someone needs to invest into or actually declare to invest at this stage?
Yeah, so if somebody is looking upon investing into VC, when it comes to individual investors, the minimum amount is 100,000 euro that somebody needs to be able to invest. When it comes to kind of a more institutional investor, then it goes up to $1 million and beyond. And when you're investing into VC, not always all the money are kind of invested on day one, because as we are investing, we're kind of making capital calls, so we're kind of getting the funds to make the investment, right? So this can also help to extend that in time, how much money you have to put into a VC.
Mm-hmm. And there is, of course, a management fee that you also call for at the beginning, or?
Yeah, there's a part of the money is also for the management of the VC, because of course there is a lot of administration costs, like due diligence costs, and the management itself, right? It's not happening for free, but that's covered in those capital calls that you have. Of course, there are different ideas how you can divide that, but basically this is not that much a separate payment or something. This is included.
So if someone would like to learn more about your VC, and if someone would like to contact you, what's the best way to learn about it, and what's the best way to contact you?
I think the best way is to kind of outreach me on LinkedIn, me or one of the partners from the fund. So.
Okay, so as you heard, invite Jarek at LinkedIn. It's the best way to contact him. Okay, so let's get back to the investment. So you mentioned that main factor that you named when investing, when making decision about investment, is the team. What is the startup team characteristic that is required from your perspective to actually to make the startup investable?
Yeah, so that's of course a very good question, and I think that we will be probably discussing this, on some kind of what are the characteristics, what we are analyzing, and how much of that versus the intuition, right? But in the end, what is intuition? Intuition is some kind of a pattern of the things you're observing to take a decision, right? So the more you're actually aware of this intuition pattern that you have, the better decision you can take. And this is one of the things we've been discussing a lot with the other partners, Marcin, Alek, Wojtek, and Hubert. I haven't mentioned them, but those are the people involved in the fund. And basically, it's a lot about thinking about the background of the founders, what kind of a knowledge they have about the market that they're trying to pursue, or the problem that actually they're trying to solve. I'm always looking upon right now to understand what the startup is going for. I'm always trying to dig into, the problem that they're trying to solve, and how much they're kind of what knowledge they have, what they have done to understand the problem. So this is one perspective of looking upon the team and the founders. But the other perspective is also the founder himself as a human, like what he was doing before, what kind of a situation he had in life, whether he was traveling. And you're also trying to learn a lot about the person, You also would like to talk to the people that you work with. So I think this is a kind of a combination of those two elements, the founder as a person, and the founder as the person in the market that he's pursuing.
Mm-hmm. You're saying founder. So solopreneurs or a team of founders? Which one do you prefer?
Yeah, so of course, it's always better than there's more than one founder, but there's usually one leader, right? So you have to also be able to recognize that. And I think that one of the elements which is kind of important to look upon from our perspective is that whether this is a leader you would really like to work with, because it is also about attracting good people into the business you're doing, right? So I think that solo founder, that's always a risk, but you need to have the leader that is also able to have co-founders that are really also very good people to involve.
More as a backup or more as a, their competencies need to match to each other, or like this is this idea of hacker, hustler, hipster team of founders, which someone tried to prove that is the best. At the end of the day, there were some research that shown that's not necessary, but like the data shown after a couple of years of such a teams that they are not necessarily much better than any other teams or solopreneurs. So what do you think about that team composition? Like what type of skills the team, if there is a team, they should have? If there is a solo founder, so usually when they are starting, they're also hiring first people, and who those people should be.
So I'm always telling this story about starting my first company, and then I had this like 3 people coming from technical studies, being developers, right? So basically, I think that the team needs to be more diversified. But I'm not saying about diversity from a perspective of the gender diversity or the countries they are coming from and so on. Sometimes it's also an interesting value that you can have in the team. But first of all, there's usually a person more technical, right? Especially that we're investing more in kind of a technology startups. And it's good to also know who could be responsible for sales, the marketing, and also kind of trying to manage all of that. So if you can actually develop the diversified team from the perspective of knowledge they have and experiences they have, it's much better than they're just coming from one background or one company.
You said something very important, that's very often it's a story that the 3 people, usually 3 guys from technical university came together and started building a business. Of course, where they started is, okay, we will build the software. What do you think about this kind of approach?
Yeah, this is this biggest challenge. And coming back to what I said before, that in the beginning, it's not about the solution, it's about the problem. And usually when you have the skills on your own to start developing, the best thing is to start to develop the software, right? I did the same and failed because of that, because I have no idea about the business and the market I was going for. It was all about actually creating a solution. So I think that's the biggest trap they can fall into, is that they will directly start to develop something, not knowing enough about the market and the problem they're going for, right? So haven't yet came across technology team, like the team when there's only technological guys and that they can really succeed from that perspective. But of course, sometimes when you are developing a unique technology, I can imagine that this is also possible.
Deep tech startups that we are investing into.
Yes, right. And usually if you have done a lot of technology R&D and you created something unique, then it's more of a question, okay, so how to turn that into business? And that might be the challenge they will come across, right? Because they have developed a great technology, but the technology itself is not going to create a successful company, right? So you need also a great business model.
On the other hand, it might be just a quick exit, like selling the technology.
Yeah, but is that going to be a big exit, right?
Let's get back a little bit to the investor's perspective, like VC investor perspective. So you said that it won't necessarily be a big exit, and as a VC, you're actually looking for big exits. Yeah, you can tell a little bit more why, because that's most of the startups, as you know, fail. Yeah, and many of them will not exit at all, and your role as a GP is to actually find the startup which have the greatest chance to succeed and to exit later on and to return the capital that was invested.
Yeah, and this is also connected to what we were talking about, diversification, right? Why you're creating a fund to invest in more companies is because you want to diversify it. And you also need to be aware that not all of those businesses will succeed. And what does it mean, from the perspective of taking the investment decision, is that if you would not take enough risks, you will not create those big returns, because you will end up maybe with businesses that are, maybe are even profitable, but they're not really successful businesses. So you need to take the risk. You need also to go for more ambitious projects and more risky projects to find the one that can really kind of create the return for the investors. Yeah. And when we look upon, creating the portfolio and also the direction that we're going, coming back to the example that you were saying about selling the technology, of course, this is, a thing that can happen, but this is like maybe limiting a bit losses that you will have on this business. But if you want to create a winner, it's not only the technology you should sell, you should develop the business that somebody wants to buy, right? And I would say that this is the big difference in that kind of thinking and how to diversify and build the portfolio correctly.
Getting back to the team and to the startup itself, if there is too much focus on technology itself without any business thinking, without any market recognition, etc., that sounds like some kind of red flag for you as an investor.
Yes, of course, this is
at least in many cases, like if it's not that deep.
Yeah, because if you look upon successful projects in the market, right? I think that if you look upon what is happening in the US and it's what is happening in Europe, I'm kind of observing that they are having a lot of projects that could be even successful in sales and marketing, but in the end fail to deliver the product, right? With the right quality.
This is why they're hiring so many people from Poland, software houses from Poland to actually deliver it.
Yeah, also that. And when you look upon Europe and especially Poland, I'm observing a lot of very good product and quality products, but there is no sales and marketing. Mm-hmm. And if you would have those two, what is more likely to succeed? The one that has a great product but has no sales and marketing, or the one that has a sales and marketing but just need to, improve the product? And if I'm seeing those two, I usually would say that actually the one with the sales and marketing will win.
Yeah. If you sold it and you have money, you can buy the product and buy the product development, even from Poland. Yeah, like that doesn't matter. Okay, what are other red flags that you see sometimes when founders approach you and you see no way, I will not invest into that team?
Yeah, a very common trap that we are observing is this way of thinking about the cap table, right? So who has how many shares and so on. So one thing is that, for example, very early stage investors like angel investors are taking quite large stake in the company. Mm-hmm. And basically why this is not a good thing is that whenever you're trying to get money for further investments, in some way the founders will have like very little. So where are they going to be still motivated to really fight for the company, right? Or do they just decide at some point leave because it's like they don't feel it's their own company?
Yeah, and of course, in this case, it might not be their own company at the end of the day because, for example, that they could lose the chance to make any decision if they will be in the minority.
Yeah, of course. And at some point it might happen, but at least the company has to be at the right level when it's actually, growing business. Yeah. But not in the early stage. So this is one of the red flags we're seeing and observing. And the second thing is also how the shares between the founders are being split, right? A lot of teams have this situation when there is the leader that we were talking about, the leading founder, let's say so, and he's having like a lot of shares, and he just give a bit to the rest of the co-founders. And then we're asking ourselves the questions, okay, so whether those are really co-founders that will fight for the company, or they are just the kind of employees that have a bit of shares, right? And this is also a kind of a red flag we're looking upon. You really want to, in the beginning, have this kind of a team that is really there for the company. It is something they're focused on. So also when you have this situation where somebody is working with a company but is doing something else, that's again a risk, right? And so a lot of those elements from the perspective of the cap table. And the second thing is what we were talking about, the market. Mm-hmm. So if we're observing that this is mainly, thinking about the technology, but not so about the market, and no understanding about the problem, no unique kind of insights about what they're trying to do, that would be the red flag as well.
Mm-hmm. So, but you said that it's all about market, but you still have been talking about the startup itself. the way they are approaching the market, the problem. What about the market size, for example, at all? How do you recognize if the market is big enough for investing into the startup that is trying to conquer this market?
Yeah, I wouldn't say that there is a specific number that you're looking upon.
Yeah. I've met people who said that. Yeah, they are doing the math and they're saying, okay, the market value is like this. 1% from that will be this and that. If I will give, let's say, 10 millions right now, then the return, if the 1% will be covered, then the return should be this and that.
Yeah, of course you can play these number games and try to figure out basically whether the market itself, how big is the market, how much of the market you can grab, and so on. And I would say that there are two different approaches in the VCs that we're also observing from that perspective. That there are those financial guys that they're playing numbers and they're thinking only about numbers, and there are more like kind of the people that have been doing businesses and they have an understanding what is important to build a business. Because of course you can recognize if the problem is too small. Because for example, you have those situations where the problem is a local problem. You know, it's not a problem that is repeatable in all different countries. Or you have a problem that is actually happening in all of the countries, but it's not so much repeatable. So it means like you would have to adapt every time you're trying to get into other countries. So I would say I would look more from the perspective of how scalable this is, you know, than how big is the market itself. What is important from a market perspective? It should grow. It should definitely not be declining market, right? So you're looking upon the markets that are growing. And the second thing you're looking upon is whether the approach that you're taking is going to be scalable so you can actually generate a big business from it.
So, okay, let's assume that you found a startup or startup found you, that you would like to invest into that startup. Like you see, okay, there is a potential, team is okay, market looks growing, looks great, etc. What is the next step? How do you perform due diligence? What's the next steps that you are performing when you want to make a final decision, sign a contract, and invest into the startup?
Yeah, so that's the, you know, talking to the founders, doing all of the things that we're talking here. It's already a due diligence that you're doing. And in the end, you have to go through more formal process of gathering the data, kind of looking into the things, trying to mitigate the risks that you're observing. And in the end, when you're kind of collecting all the information and you're kind of listing down all the risks and you're going into the committee, and then the discussion starts with all people involved in the investment committee to verify whether the risk that you have identified are how crucial they are, how they can be mitigated, and you know what's the kind of risk versus outcome in that particular project. Whether this is one of the projects that we're really investing into because we believe that can be the winner, right?
You mentioned the contract. So how does this contract look like? Like you know, like we are recording it for people who are usually making their first steps. They are trying to start their first startups. I would like them to learn a lot from this episode. So sometimes there is an established LTD company before people are approaching the investors, or sometimes it's just one person who is building something somewhere in the garage, and then it needs to be formalized. So how does it look like from your perspective, from your investors' perspective?
You know, I would say that in most of the cases the company is already incorporated. So from that perspective, it's easier to kind of go into a contract. And I think that these days it's also not that it's not that hard also from the founders to learn more about how the contract should look like and what are good things, what are the bad things. Because there are even some VC funds that are just opening up the investment contract themselves, right? So we can really see what are the market standards. So I wouldn't say that there's anything like that we're trying to do in the contract itself that is like something very specific. Because in the end, it's all about the trust between the fund and the founders, right? So, and you definitely don't want to create the situation where the founder starts to feel like they're prisoners in in somebody else's business.
Actually, it's pretty often. I've met a lot of founders who feel like that, who complain that after, especially like the second round or something like this, or third round, they feel that they are working for someone else, not working on their own business, because they are in a trap and they can't resign and do anything on that. That's pretty sad. Fortunately, I haven't heard so many stories from startup who were invested by Polish VCs that way. But from other countries, I heard a lot of stories like that. So it's pretty common, actually.
Yeah.
I hope you will change it, and and also for all of the startup founders, when you are choosing, I think it's a good advice. When you are choosing, and you have to choose venture capital or investors you want to work with, it cannot be. It's also like two-sided contract, and you need to be a part of this, and you are eligible to make this decision as well, and you can reject some VCs if you see some red flags and something that is not okay. So also beware who you are letting into your company, and who you are allowing to invest into you, because that will determine the future of your work and your life as well as a founder.
Yeah, and of course, you can always talk to somebody that's been working with those people, right? Because I'm always saying that, it's not B2B, it's B2H, right? So it's always about humans working together, and you're usually in contact with one of the person from the fund, so you kind of can get to know the person that will be probably responsible also for your project in the fund. You can also talk to people that are working with those people, right? So it's not like I don't want to say a mystery, and you cannot learn nothing about the future people or the fund that you're going to work with. It's just some kind of a homework that you need to do yourself to find out how it's going to be like.
Okay, you've mentioned about the market before and growing the market. So how important at this early stage, because we are talking about the early stage startups, how important for you as an investor is the growth strategy? Like, if the startup has a growth strategy, and how much you are investigating it and checking, verifying it before you make a decision about investment?
Yeah, I think that it will definitely depend on the stage where the company is, because when you will in the pre-seed stage talk a lot about growth strategy, I think that they might not have yet enough data to actually build a proper growth strategy, right? So then it will be more about the market problem and the team. Mm-hmm. When you will go into the seed stage, that's already somewhere where you can start discussing about the growth strategy and how to develop the growth strategy. Because one of the elements of actually succeeding in rising Series A after a seed round is actually being able to have the data to know how to develop this growth when you get the Series A, right? So I would say pre-seed is not so much about growth strategy yet. Seed is about searching for the growth strategy, and Series A becomes to be the implementing the growth strategy, right?
Starting scaling. Yeah. Okay. So how does, because it's changing, like the stages or the stages that the startups are in and are investable by different kind of investors are changing in time. Like I remember that, let's say in 2019. There was a lot of money on the market and a lot of investors looking for opportunities, and actually startups, even founders who had just an idea, could find someone who will invest at least some small amount of money for some usually significant amount of shares. Later on, COVID happened, everything stopped, and like all of the investors, like no follow-ups, no anything else. Then 2022, COVID ends. Let's say pandemic ends, and again, like there was a rush for startups, and again, anyone with a good idea, and like a lot of hype around. I forget what was the hype at the time. Maybe AI, no, not AI yet. Like different things, and digital economy, whatever. So people were like, it was easy again to raise the capital. Then 2023 recession started, or sort of recession, and everything like stopped, and like a lot of funds ended. And again, what investors, it's January 2024 when we are talking today, and right now I see that the market looks like this, that investors are looking more for startups that already have a traction, like have some money that users are paying for their services or products. Yeah. So how does it look like from your perspective?
Yeah, so definitely what happened during the pandemic, that was an anomaly, right? But it actually all the things happened already before even the pandemic. So there was this hype for making VC investments, the startups, and so on. And I feel that everybody forget about the one crucial thing about building a successful business, and this is capital efficiency. It means that you need to spend money in a way that it actually makes sense, not just to spend them to get on a next round. And I think that happened because of too many people coming from the financial world started to be in the VC world and thinking about the numbers game. So they're more like, they were saying about something like a VC factory line. So they were kind of taking a possible IPO valuation and thinking about how much we can get from for that company on IPO, and then breaking it down into all of those rounds. We heard about Series A, Series B, Series C, Series D, and they've just been pouring money into the company because if the revenue was on the level they thought it would be enough to go on the IPO, then they were just going for the IPO to get the money back, right? But in the end, what happened is that a lot of those companies that were getting too much money were not that really successful after the IPO because they forget about capital efficiency, right?
And sometimes, they receive so much money, and actually it wasn't possible to invest that money, like to use that money in a way that will actually increase the company value.
So a lot of companies started to be overfunded, and really investors forgot about this element that being able to turn profitable, the unit economics in the company so that in the future it can become profitable is also an important factor. And that's what I'm saying, like being an entrepreneur before, you're actually understanding what it is to build a profitable business, that it's not like you can spend all of the money you have just for the marketing, because if you spend a lot of money into marketing, you will be successful, right? It's really about understanding how you can spend this money so you can develop the advantage towards others, because that's what it's all about, right? You're in business where you need to compete with others, so you need to be more efficient, right? If that would be the case, that the one that has most money always win, then the corporations that has a lot of money would always develop the best things. But that's not how it works, right? They're actually investing into startups because they know themselves that they cannot be efficient in building new things.
Don't you think that what you said, that for the last couple of years the startups investment was mainly a number games? Don't you think that was caused by the pretty long time since we had like a previous crisis? Like I remember the previous serious crisis we had like somewhere in 2008 ish, and then a few years later it's ended up, and then we have like a prosperity and grow for the next couple of years. And that was actually the time that there was a lot of startup that rised. Of course, before 2008, there was like a dot-com bubble, etc. And again, also some period of prosperity. But actually, startup investment is something pretty new in the humankind history. And okay, we can tell that even in the ancient Roman times, there were people who were investing into others, etc., etc. But startup itself, especially internet startup software, it's pretty fresh, pretty new, and we don't have a lot of data. And actually, what those finance people try to do, they try to extrapolate on the data that they had from the long period of prosperity. Usually, a lot of data came after 2008, 2010. And they try to extrapolate it into the future, where that there is this cycle on the market, and the cycles on the market, and actually their prediction would work if the future would be as it used to be in the past 10 years.
Yeah, I would say that when it comes to VC is this way of investing in the company is actually started in Silicon Valley, and it's actually started a lot of already like in 80s, and so it's not that new. But one thing, it was obvious for maybe financial investors and so on, that actually this VC world is actually outperforming other asset class, like shares and other areas of how to multiplicate money. But they did not understand the game. So then you started to have a lot of purely financial investors in that world, which were playing the numbers game. They didn't really know that it was more about actually the experience of those early investors, entrepreneurs being able to open doors, having the knowledge how to do it and so on, because that's basically how it used to work. And then it started to become, a lot of money and just trying to fund as much possible, diversify, having large portfolios, and somebody will become a unicorn and it will return the whole fund. I think that's always the same case when you look upon when the market is growing, then everybody is like pretty positive that this will work. But when it's the downturn, they're saying like, if you drain the water from the pool, you will see swimming pool, you will see who's swimming without pants, right? Yeah. And I think that's exactly what happened, is that, suddenly the market condition has changed. And then this was a pure verification for all of those startups out there, whether they're just spending money or they're building efficient business.
Also, that the amount of money that was invested, I'm not saying about the investors and VCs and GPs, but I'm mainly saying about the LPs, that limited partners that you mentioned. Like among them, there were a lot of investment funds, capital investment funds. You said also family offices. Yeah, all of them are diversifying their portfolios, and startups are usually just a small chunk of their total investment. But when there are other opportunities, like for example, like bonds, government bonds, with a pretty high percentage and very, very low risk comparing to maybe high return on investment on startups, but the market is like a snowball, deciding that we are not investing here because we are investing in bonds or other options. Like those investment funds, number game people, they were moving their capital from risky assets to more stable assets that still been pretty profitable. Of course, under inflation, but much less risky than investing in the startups.
Yeah, of course, this has an impact because it's always about the risk they're willing to take to earn money. And if there's like the bonds are very good at that point, so maybe they don't want to risk and then just want to wait and see what will happen. But I also think that, when it comes to the VC world, what happened is that there was too much capital comparing to not enough experienced managers to know how to invest this money. And then basically, if you have a successful VC, it's probably already like they have their own LPs. Mm-hmm. And usually those LPs wants to invest in the further funds and so on. So that means that if you haven't been in the VC game and you don't understand it, you're trying to invest into somebody new, and the ability for you to know whether this is going to be a successful VC or not, this is the risk, right? For a proper due diligence and understanding of about how this team is actually thinking about investing and what they're doing. So I would say that part of the problem was coming that there was too many VCs that were not really knowing what they're doing, right? So, because if you look upon those the best VCs, those the ones that are more closer to the companies, because the crisis happened, it may be a more problematic for the startups to grow, but it doesn't mean that they were suddenly going down because what they're doing makes no sense.
Okay, let's get back to the startups and investment in the startups. So you've made the decision, we are going to invest in the startup. You run this due diligence process, you check the numbers, you talk with the committee, you decided, it's a good moment to invest into them. How do you evaluate the startup? So let's talk about the money. What are the factors that determine the startup's shares price and the amount of shares that you're aiming for when you're investing?
Our perspective is that we're thinking really how far this startup can develop and what can be the kind of an exit valuation that we could see within this project. And we think more from the perspective of our investment versus return from the investment, right? And also we have to take into account other elements of how much equity we can get from the investment, because we have to take into account, what are going to be the next rounds, and we want to create an investable company. We don't want to get a company that we have a 70% and the founders have 30%, which we already saw creates a lot of problems. So I think that those are the two main factors. So one, we're thinking about, how far it can go and what could be the return for us. So how much we have to secure from our perspective of the fund and the returns to the investors. And the other thing is how it is going to develop so that we can allow this company to get financing for the next stages of its development.
Mm-hmm. So typically, what amount of shares, percent of shares, are you aiming for at this pre-seed, and is it different in the seed round?
Yeah, so our sweet spot is to secure 10% at least in the company, and then we're trying to follow on with the good projects so that we can really secure this level. Because when we want to be engaged, it needs to be on the level where it makes sense for us when we look upon the future returns.
So, like, I'm doing the math right now. You said that is around €500,000 or 600,000 euro on the pre-seed for 10%. So you already evaluated the company for 5 million.
Yeah, it depends from the company. I said what's the average ticket. It's not it's not that we always have the same ticket, right? So it very depends on the situation.
So it's actually required from you to find the startups that have a really huge potential. There must be a lot of startups that you are rejecting right now.
Yeah, actually, if you look upon the deal flow, you're screening like 2,000 startups, and then you need to choose a few that you're going to invest into. So this is a kind of a tough job from the perspective of finding the right project to invest. And going a bit back to the valuation topic that we've been discussing, and when I'm talking about rising next rounds for the project you're investing into, you can also create a situation where the valuation becomes too high at the stage where you're investing, because it will create a bit the problem for you to fundraise next round, right? Because somebody will not agree that the valuation at the next stage is above something you've invested in previously. So yeah.
So how do you look at the other investors, like co-investors? In your case, like you said that you are aiming for being a leading investor in this investment, but okay, it's average ticket size, average valuation, but through that, you're actually telling to others, okay, there must be a huge potential into that, since we evaluated the startup for a couple of millions already at this stage. But it also caused the problem for many other smaller VCs or VCs who have a different strategy, like more diversified strategy, smaller tickets, etc. on the lower valuation, because they would consider such a startup as uninvestable for them. Did you consider that? Or maybe you're only aiming for the best startups, best co-investors. You don't care about the rest.
It depends on which stage we have to consider co-investors, because our strategy is we don't have to consider co-investors at the pre-seed and seed stage. Yeah. The co-investors starts to come, actually, they're not so much co-investors, but they're coming after us in the Series A, right? So basically, the reason for us to consider co-investors on the early stages would not be really the money that he needs to put in. We would be more thinking about what besides money this co-investor is bringing in to the table, right? So from that perspective, what we have to think about is thinking about the next investor and the valuation that we will be expecting at that time, not our own investment when we are a lead investor.
Yeah, and actually, I see some advantages of it. I recently spoke with a friend of mine who she is running a startup, medical startup as well. At some point in time, before the Series A, she already had like 28 shareholders. Most of them were investors who, like some bridge rounds, etc., 28 investors. And that was actually, it doesn't mean that they had like a majority of shares. No, they were still in minority. But still, having so many people where everyone has good advice, good idea, and is trying to pull into some direction or trying to convince founders to do something. She said that was a nightmare. Fortunately, she found a huge investment fund who invested into them in the Series A, and they actually buy out most of the shareholders and clean up the cap table. She was pretty lucky, but she said that was a nightmare. So I believe that in your strategy, you're actually avoiding a lot of these kind of problems through maybe not blocking, but limiting the number of other VCs or investors who would follow you in the investment.
Yeah, especially when we want to kind of get engaged and help these projects to succeed. So why there's somebody else that should benefit from our work, right? So we rather look upon that, okay, if we're investing, we're going in, then it really needs to make sense to get another co-investor that he brings something more than money. And that's why we're not creating this situation. And agree, when it comes to those red flags we were discussing before, like having too many investors is also a bit of a problem.
Yeah. Okay, so you made a decision, you have evaluation, you sign a contract, money flow to the startup. What are the next steps? How do you work, or do you work with the startups after investment? I'm pretty sure, knowing you, that you are at least a little bit involved. What is your involvement into the startup day-to-day work, or how the cooperation with the startup founders look like after the investment?
Yeah, so usually what you're creating a board, right? Which doesn't have to be like very formalized board. It's basically the place where you share the information with the investors and the founders, and you're kind of looking into what is happening. And depends on the stage and what is happening in the company. You can meet either monthly or quarterly. And then, of course, there is a person from the fund that is responsible for the particular investment. And then, from my perspective, what I'm doing is that I'm trying to get the calls with the founders at least twice a week, and just trying to kind of be there to really support them in what they're trying to do. Because it is really important whenever you're doing anything, just having a reflection of what you're doing and having a kind of somebody that was going through those stages before. He has an experience from other companies. He also has an insights in other companies that he's working with, right? So exchanging this knowledge between the portfolio companies, bringing in a different perspective, trying to kind of help the founders understand what they're doing is really important. And that's what I'm trying to do. So one thing is kind of a more formal way of following and seeing what's happening in the company, like the board meetings and taking more kind of a long-term decisions and so on. And the other thing is supporting the founders on more kind of a more constant basis. And of course, the thing is that he can always call me and discuss whenever he has some struggles or there is an important decision to make. So that's my understanding of working with a company.
Actually, twice a week sounds pretty often. Like, can you provide some example how this kind of call look like when you call one of your founders that you invested into?
Yeah, so I would say yes, twice a week might seems like a lot, but it's not all the time we're taking like an hour or something. It's more like really to check in, just have a discussion, whether there's any topics that are worth discussing, and do we want to kind of go into details into something else. And it's more like, really being close to the company and to the founder. He knows that, you're there, you're supporting him, you know what is happening in the company, and this is more important than actually, spending long time discussions, because I don't want to take too much of his time. Those are also kind of a busy persons, and I will not do it for him. Mm-hmm. But I would say that, this kind of a mentorship idea, that there is something more experienced that have seen different things, can really ask you sometimes very good questions so you don't make so much mistakes. Because in the end, people will make mistakes. They will have to learn from their mistakes as well. But at least you can somehow try to avoid
the most obvious, especially.
Yeah, the most obvious and the one you've made yourself or you've observed somewhere else. And this is it. And basically, also from the perspective, I'm also talking a lot about this kind of a mental area and the mental perspective of being a founder. A lot of things is happening. I think it's also being there, supporting that person, that also helps from that, level. So,
any examples of how this like? Do you have any like a recent story maybe that you helped the founder with something, or the founder approached with some problem that they have, and you help them to solve?
Yeah, so I'm currently working with a few companies, and basically, one of the main struggles is, for example, sales, right? So how to approach sales, how to approach marketing. And I'm not saying that in all the cases I will be the best person to help them, but I might be able to connect them with the right person to help them, right? Mm-hmm. And in the other case, for example, when there is some kind of a problems between the founders and there is a conflict, and and then the person coming to you and saying that there's a conflict and so on, and you can step in and help to mitigate this conflict. And when there is, for example, discussions about the next rounds and the investors that have approached the company, is it good timing right now to engage? How to engage? And so those are just few examples of the things that are being discussed between me and founder.
Actually, it sounds pretty impressive. I've met a lot of VC, a lot of business angels, and not everyone is doing what you do. Like some of them just providing money, and then they are just often making some small or bigger pressure on you to actually follow the plan or realize the strategy and the goals, and then they actually not doing anything more or not adding anything more. But what you describe is actually something that I believe that many startup founders, especially those who are doing this for the first time, or even those who are doing like as a serial entrepreneurs, could use and could benefit from. So sounds great.
Yeah, and just when it comes to what you said, that a lot of investors are not doing that, we are also observing this because we're coming across interesting companies and they already have a VC in their cap table. And then when we look upon what's happening is that we're really saying, okay, why they have not tell them, what they have to achieve to actually start, fundraising the next round, because you're getting money from one VC, and if that VC is only going to give you money once, then you obviously will probably have to go for another round and get the money from another VC. So if that investor will not really help you to get prepared, then it means that you will burn the capital and you will try to get another round, but you will be completely not in a position to secure the next round. And we're constantly observing this situation. And sometimes this is a really good project, but it's like you don't want to put your investment just to kind of do again what was supposed to be done in the previous round, right? Because it's like you're investing not into the future of developing the company, but you're kind of investing to kind of fix the problem.
Yeah, that's very important. So how should they approach business angels? And how should they approach VC? What are differences from the founder perspective? How they should behave? What they should present to business angels or angel investors? If there is anything else that they should show to the venture capital?
Yeah, so I think that when it comes to the business angels, of course, I can imagine that there are also different types of business angels. The ones that are kind of less experienced, the ones that are more experienced. In the case of business angels, it's more about finding also the person that can bring something besides the money, right? So it's a person either from the market that you're going to develop something, or has some kind of a knowledge that can really help you to get to the next stage. When it comes to the VC, then when you're going for the VC, you need to be more aware of where you're actually already going. It's not like you're in the research stage where you're kind of still don't really know, you haven't developed the team yet, because I'm constantly seeing this kind of pitch decks where there's people coming out of a big company and saying, oh, if we will get money, we will do it, right? But you need to show that you have a skin in the game. You did something, you invest into it, You even convince somebody else, like business angels, that knows about the market, that it can work, and they're also able to risk, to invest. So if you want to go for the VC money, you need to be much more kind of prepared and do something before you're going to, start raising money.
So what about the people who already have some capital? Like, they were working in a software developer position on 4 companies at once for the last 5 years. And they have so much capital that they would like to invest into startups. So any advices for them to what to look for, how to start investing into startups?
Yeah, so you mean like from the perspective of the people that wants to do it themselves?
Yeah, let's say that I have like 100,000 euro right now, and how could I invest it? Or another case, like someone else has 20,000 euro and they are thinking about investing into startups.
Yeah, so I think that you need to ask yourself a few questions. First thing is that how much you want to get involved beyond the money into those startups. How this is your idea.
How much should they?
Yeah, or it depends, because if you, as we mentioned, if you're doing the angel investment, it's probably more about what you can bring in than just the money to get it succeed. And the other thing is also that you should ask yourself, okay, so am I able to actually find the best startups on my own to invest in, right? So you have to take into those two factors, whether you're capable of doing it alone and what is your idea for the investment, whether you are considering this pure as a financial investment, or you just, you want to be really involved, right? Like being with the company that you're investing in.
So if I don't want to be involved, like as I said, I'm a software developer, and what could I bring to the startup? Yeah, I can code for them. No, come on, it's not what I want to bring to any business anymore. So I would like only to invest my capital into startups, maybe into some specific startups or some. I don't know. I'm very passionate about space technology, so I would like to invest in the startups in the industry of space industry. Yeah. What could I do with my money to actually start being a part of the startup ecosystem?
Yeah, so if you have, as I mentioned before, you need to take into consideration that VC is some kind of an asset, financial asset class, right? So if you have a very specific needs when it comes to investing and so on, then you probably will go more for searching for such companies and going into different events and so on, and then maybe get involved in some kind of angel investors network or something. So that would be the path. If you're thinking about, how you can earn money and don't spend that much time, like more passive kind of investment, then you would more look upon VC, right? But I don't know if, we're talking about software developers having a lot of money. I don't know whether they have so much money that they're kind of willing to spend that into.
Some of them, like invest into Bitcoin and do have a lot of money or other cryptocurrencies, whatever. In terms of investing into VC, you mentioned that it's an asset class. Like when you invest into stocks, there is like a bunch of advices and protocols that you can go through to actually pick the right companies to invest into. Any advices on how to choose the VC to invest into? Like, not take. I assume it's not like take any VC from the market and you will succeed. I don't believe it works that way. I'm pretty sure that some VCs are failing as well. And as you mentioned, that not all of the VCs had the experienced managers, and not all of them proved that the money that was invested actually provides enough return on investment to satisfy the investors. So how to pick the right VC? And of course yours is the one, yeah, but how to pick any other VC?
It would be more like, we're going from analyzing the startup into analyzing the VC, and how different it would be. Of course, you have to look upon the team, right? Their experience, the track record, the things they did in the past, and then basically you have to also look into their strategy and their way of thinking. So one thing is that you're also assessing the management team, right? And to see how successful this team can be, and what is the experience and what is their thinking and so on. And the other thing is also the strategy and the market they're going after, right? Those are the two elements that you would probably also assess in case of startup that you would look upon. So I would say that those two are the first thing to look into. And one thing, maybe kind of an important thing, which everybody's forgetting about the VC, and this is a common trap, because this VC world seems to be like almost a fashion show sometimes, right? That the VCs are showing like great startups, great valuations, great big rounds, and everybody's forgetting about one thing, which is a bit different in our case. It's good that the companies are growing in the valuation. It's great that they're getting a next big rounds, but how much capital goes back to the investors, right? How much exits they have, how much cash they're paying back to their investors. This is really what is the VC about in the end, right? If you're an investor, you want to get your money back. Yeah. Not only having a great set of startups that are valued like super high, and we all learn lately that even the valuation is not constant, right? So I think that's the one important factor you should look upon.
Yeah, and also it's very important that the valuation is just a valuation, it's just a number. This is the number that you can print valuation of your portfolio as an LP and see how it works and put it on a wall, and this is all what you can do with this. You cannot actually I can imagine it's pretty hard, if possible at all, to sell your shares in the VC or your position. It's almost unliquid. So until the exit, you just put your money somewhere, and those money need to work on itself. And there are people who are working on making it even bigger, but it not always work. Yeah, like that there is a high risk. So again, so for everyone who want to invest into startups, remember that there is a risk, and you need to do your own assessment of the risk and decide if this is something that is good for you. Especially if you haven't invested your money in anything before, it might not be the best idea to start with investing in startups directly, and also it might not be the best idea to invest even into the VC itself.
Yeah, and I think that everybody thinks about the VC that it's all about making an investment. And I would say that making an investment, the decision and invest money is just the beginning of your work that you have to do. Mm-hmm. Growing the company and then exiting the company, right? Mm-hmm. It's not only about doing one round of investment. And this is really kind of a different perspective that we have in our fund.
So let's talk a little bit about the future. How do you foresee the VC market in the next 5 to 10 years? Or even VC is a long term, 10 to 25 years from now. And how do you think the artificial intelligence will impact it? It will impact the decision and data mining, a lot of things that are happening right now. How those changes will change the ecosystem right now?
Yeah, I think that us in all kind of markets, everybody's trying to start utilizing AI to help taking the right decisions, right? And we can imagine that when it comes to stocks and stock exchange, there's already a lot of algorithms and a lot of technology being used to earn money on that. And I'm kind of thinking that, of course, I'm observing the same thing starting to happen in the VC world, right? There's companies that are collecting a lot of data from that market, from the private market, like Dealroom, PitchBook, and Carta, which are trying to develop different algorithms. I think that there's a bit one factor which is a bit more specific, and this is the founders and the team. And just collecting the data about the verticals, rounds of investment, and so on, might not be enough to be successful in that. But I can imagine that at some point somebody will also kind of start to dig into understanding the founders and being able to kind of assess who needs to be there and so on. And you mentioned yourself that a lot of researchers are not really saying that you should have a diversified team, and then you have researchers that saying this is not necessarily going to take place. So how long time it will take for AI to be able to assess that, I don't know, but I can definitely say that VC is becoming more data-driven. Mm-hmm. It's not just doing the investments, it's thinking about your VC model, like how you're actually going to build the portfolio, how the company might be developing. It's more using the data from the market. It's more looking into how the company is being developed, also using the data-driven approach. So the more and more data we're going to be collecting, the more likely in the end AI will also be able to utilize that data, right? And the question is, how much of that data is going to be public and available, and how much of that data will be a specific criteria that the VC company is going to collect and evaluate for themselves, right? Because in the end, this is your unique knowledge and unique approach is those elements that you're observing, and you're trying to figure out which of that creates a successful company.
Are you already working with your VC on collecting the data and trying to starting analyzing it and dig into it and see some patterns?
Yeah, so we already are digging into data, and even from the perspective of how we're modeling the fund, what companies we're investing, what size of rounds we have to invest, and so on, how much of equity we need to secure in the company. This is not anymore just case by case. We have a developed model, and we have also developed different scenarios of how this can be developed. So already we're using data-driven approach, even from the perspective of how to make the investments. And also looking upon the other perspective, we said about the market and we talk about the team and the founders. We also are starting to collect more information about the founders in a way that, we want to turn our intuition into more data-driven decisions. So we are already doing that.
Great. So if we are talking already about the future, so what trends in the startups, in the technology you see and you foresee that might be the next big thing in IT, in startup ecosystem? Like we had blockchain. Currently, we are in this AI trend that many companies are trying to use AI. There's a lot of new tools that are appearing on the market. What will be the next big thing?
Yeah, that's a good question. What will going to be the next big thing? I would say that one of the things definitely is the quantum computing. When that is going to be on a level where we will see more and more public available implementation of using quantum computing, I think it will change a lot. And it's probably already changing a lot in cybersecurity space or all of that kind of things. So I would say that we will definitely a big change when that will happen. And of course, I'm also looking into this more kind of a biotech, right? I think that is something that is coming and will create a lot of big changes from the perspective of like even creating biocomputers. So combination of the technology, biology, chemistry, and so on. I think that will create a huge market. And of course, there's already this transition happening in the kind of energy production and so on. And we're seeing that already energy storage is a huge thing, right? There are so many companies working on it. And if somebody will really crack it, that will create a really big business.
So what you're actually saying is something that I also observed, that right now what the next big thing will be about is mainly combining few different science areas together, like biology, chemistry, medicine, and IT. And in case of the biocomputers even, or something like this. By the way, in one of the previous episodes about the AI with Dr. Jan Agasiński, we've been also talking a lot about the biocomputers and this trend and how this is evolving, and things how also it's impacting the artificial intelligence development, and biocomputers and AI might also be some kind of trends. Quantum computers is also physics and engineering and a lot of stuff like this. Energy, again, physics, engineering, software, IT. So I have this, when I'm looking at the education system, especially here in Poland, but also across the Europe and also in US, like, as you mentioned before, like, usually the startup team that came to you are those 3 technical guys who finished the technical university. And okay, they had a chance to meet some biology students, maybe they're more often physics students, like in Krakow, but they never met anyone from sales, marketing, management, etc. Do you think that the education system needs to change to actually copy with these challenges and these new trends?
Yeah, one thing I was always saying and observing is that when you have this universities, they're created like there is a technical university, there is a medical university, there is like a financial university, right? Yeah. What would really happen if you would start to combine those environments? And I think that there was like a great example actually coming from Finland when they have put together and the artists and the tech guys. And then the gaming industry started to be booming, So I would say that this is a flow model that we're trying to divide those areas instead of allowing them to actually work together. Because in the end, we would have much more interesting projects if you would have somebody from the medical university, somebody from technical university, and maybe even somebody from financial university or management university or so on. Yeah. But if they don't get connected, and they don't create the trust and they're not exchanging ideas and so on, it's much harder to achieve that.
Yeah. So this is, I think that's something that would be great if it would change any soon, maybe here in Poland as well. So 2 last questions. For first one, Jarek, why did you start investing in the startups?
Yeah, I guess that I was always, I really always liked this dynamic early stage of the company development. I've been developing my companies and also different projects, and also involved in the developing projects of my customers. So basically, I really like the dynamics, fast decision making, the culture of creating something new. This is something where I feel like a fish in the water. If I was saying that this is an area that I really like. And from the perspective of me being after second exit, I was kind of thinking, I can start another company. But also I've been able to kind of observe what's happening on the VC, and it's really nice to see all of those people that are so enthusiastic about developing something, right? There are so many different interesting things. And I decided, okay, so maybe instead of being this time involved myself in one thing, I can kind of support other people to succeed. And also it was kind of something that was inside me that I was thinking, okay, what I would achieve having the right investor, mentor that would kind of help me in my journey. And that's what I would like to give to somebody, the chance that I didn't have myself.
I really admire this level of your self-awareness and your this introspective thoughts that you had. What could you do that would help you in the past, or person like you in the past? That's something really great, and I believe that people who are working with you as the founders, they are really lucky that they have such an investor. So finally, the last question: what type of advice would you, ultimate advice, would you give to startup founders today? January 2024.
Well, ultimate advice, right? So I would say that definitely don't focus on the solution. Find out about the problem that you're trying to solve. I'm always saying this, whether this problem is big enough to be worth solving, because this is the thing that will impact the whole business, the whole company that you're going to build. And if you focus too much on the solution, that's one of the first things to fail, and that's what happened to me as well in my past.
Sounds great. Anything else you would like to add?
I don't know. There's not so much else. I'm kind of looking into maybe have a talk in some later stage, and when we can discuss a bit more specific, projects and investments, and share a bit more.
Definitely, there is a lot of topics that we can discuss together, and I will definitely invite you in the future and see how is it going with your venture capital. Thank you very much, Jarek. Thank you, everyone, for watching it, for listening it. Of course, don't forget to subscribe to our YouTube channel and Spotify and Apple Podcasts as well. Let us know in the comments, how do you like, if you have any other questions that we should ask to Jarek or to any other people that we are going to invite any soon. Just please put it into the comments or contact us. We will take it into consideration and try to ask this question. So thank you, Jarek, and thank you, everyone.
Thank you, Victor, for the talk.
Thank you.
Pragmatic Talks is delivered to you by Pragmatic Coders, the first choice software development partners for startup founders. Be sure to catch all new episodes. Subscribe to our YouTube, Spotify, or Apple Podcast channels. And if you are thinking about building your own startup or struggling with product development, contact us and find out what we can do together.